Imagine an app that doesn't just take you from point A to point B, but also lets you order food, pay bills, get insurance, and even apply for a loan, all in one place. Now imagine that app beating Uber at its own game in one of the most complex and diverse markets in the world, Southeast Asia. That app exists. It's called Grab. And its story isn't just a brilliant example of digital entrepreneurship, it's proof of how to win globally by thinking locally. Today, I'm going to tell you how Grab started as a taxi app in Malaysia and became the region's leading super app, overtaking global giants one service at a time. The story of Grab begins in 2012 when Anthony Tan, a young Malaysian entrepreneur studying at Harvard, asked himself why taxis in his country were so unsafe, inefficient, and unreliable. Inspired by Uber's idea but driven by a much more local vision, Anthony launched MyTaxi, an app built specifically for Malaysia with essential features Uber didn't offer: cash payments, precise driver tracking, and something critical for emerging markets: passenger safety. This small detail made a big difference. Instead of trying to copy Uber, Grab focused on adapting the on-demand transport model to the cultural, technological, and social needs of the region. Before long, MyTaxi became Grab and expanded to Singapore, Indonesia, the Philippines, Thailand, and Vietnam. But it didn't offer the same service everywhere. It listened. Grab added motorcycle taxis, a hugely popular mode of transport in traffic-heavy cities like Jakarta and Ho Chi Minh. It also kept cash payments, which are essential in economies with low banking penetration. While Uber pushed a one-size-fits-all model, Grab was winning users with one simple strategy: strategic localization. In Southeast Asia, adapting to local contexts isn't optional, it's survival, and Grab understood that better than anyone. But having multiple services in one app wasn't enough. For the super app model to work, users had to actually try everything. That's where one of Grab's smartest moves comes in: its strategy of cross-promotions and massive rewards. Every time you booked a Grab bike, you could get a discount on GrabFood. If you paid with GrabPay, you'd earn cashback or points. Referring a friend could earn you free rides or weekly discounts. This wasn't just marketing, it was a way to train users to live inside the Grab ecosystem. This tactic multiplied user interactions, increased loyalty, and most importantly, triggered the network effect. More active users equals more value for everyone. A living network growing organically, strategically fueled. One of Grab's smartest moves was realizing its presence wasn't just about the app, it was about becoming part of people's daily digital lives. While global startups ran uniform campaigns, Grab mastered hyperlocal marketing. In the Philippines, it ran holiday promos during Holy Week and Christmas. In Thailand, it celebrated the Songkran festival with free rides to reduce drunk driving. In Vietnam, the app and ads reflected local customs and even integrated lunar calendar features. But its real magic came from its use of influencers and social media. Grab didn't hire global celebrities. It worked with local TikTokers, YouTubers, and Instagram creators, street musicians in Manila, viral comedians in Bangkok, food bloggers in Jakarta. This created genuine connections with audiences, boosting both visibility and trust. Their campaigns were funny, relatable, and reward-based, exactly the kind of content that thrives on platforms like TikTok. Grab knew it wasn't just competing for users, it was competing for attention. And in a region where smartphones are the first point of internet access for millions, being visible, friendly, and local is everything. But the real revolution came later. Grab stopped being just a ride-hailing app. It became a super app, a platform that combines everyday services into one interface. That's how GrabFood was born, followed by GrabPay, a digital wallet with QR payments and peer-to-peer transfers. Later came insurance, personal loans, and gamified rewards to keep users loyal. This digital ecosystem model means the app doesn't just connect services, it shapes daily habits. Just like WeChat in China, Grab became the app people opened first thing in the morning. And the more people joined, the more valuable it became, thanks to the network effect. More users meant more drivers, more restaurants, more offers, and the cycle kept accelerating. Beyond billion-dollar numbers and regional expansion, Grab has had a quieter but deeper impact: financial inclusion. In Southeast Asia, a large portion of the population has never had a bank account, credit card, or financial history. Through GrabPay and other services, Grab opened the door to a new way of managing money. Today, small vendors can accept QR payments, drivers can save part of their income, and users can pay without cash, transfer funds, or even apply for microloans directly from the app. Grab has become more than just a digital service. It's an alternative financial infrastructure, especially where traditional banks are absent or exclusionary. Simply put, Grab gave real financial access to those left out of the system. The battle with Uber was intense. Both companies burned millions in promos, marketing, and driver recruitment. But in 2018, Uber gave up. It sold its Southeast Asian operations to Grab in exchange for a 27.5% stake in the company. Yes, you heard that right. Grab beat Uber at its own game. Why? Because Grab played the local game. Where Uber saw one market, Grab saw 6 countries, each with different cultures, languages, currencies, and habits. That level of adaptation is something most startups never fully grasp. In 2021, Grab became the first Southeast Asian company to go public on the NASDAQ through a SPAC merger, with a valuation of over $40 billion. Today, the app has over 100 million downloads and continues to grow, not just in mobility but in fintech and e-commerce. But beyond the numbers, its real legacy is this, proving that the digital future isn't just owned by Silicon Valley. Local ideas, when well executed and deeply adapted, can be more powerful than any imported algorithm. Now that Grab dominates Southeast Asia and is listed on the New York Stock Exchange, the big question is, what's next? The company is expanding its financial services, not just digital payments, but also microloans, investments, and insurance. This makes sense in a region where millions lack traditional banking access but use smartphones every day. Grab could become a kind of regional neobank, especially for informal workers and small business owners. It's also starting to explore AI tools to optimize delivery routes and personalize promotions. In the future, we might even see Grab integrating autonomous vehicles or financial chatbots into its app. And while its international expansion is still limited, there's talk of potential alliances with other super apps in Africa or Latin America to share tech, know-how, and even business models. Of course, challenges remain. Grab faces growing regulatory scrutiny on privacy, digital monopolies, and driver labor conditions. In some countries, there's even debate on whether super apps should be regulated like banks, tech platforms, or public utilities. But if there's one thing Grab has proven, it's the ability to learn, adapt, and stay ahead. It doesn't compete like a giant. It evolves like a living system, and that might just be its greatest power. The story of Grab is a powerful reminder. It's not just about having a great idea, it's about knowing where and how to apply it. If you enjoyed this video, don't forget to subscribe to Economy Factor and leave a like as well. See you in the next episode where we dive into another entrepreneurial success story. See you next time!